Breaking news, 107-year-old Deere and Company is about, let's call it 32 minutes away from closing at a level never before seen for the farm equipment giant. The stock is up more than 4% at the moment, hitting a record high after reporting fiscal second quarter earnings that beat on both the top and bottom line. This despite seeing $100 million of tariff headwinds during the quarter. Now, executives warn investors during this morning's earnings call that, you know what, it's going to get worse. At least it's going to continue throughout the year, that global uncertainty will continue to weigh on customer sentiment. And of course, you know, their customers are farmers. So what's got investors set a bit at peak euphoria? Joining me now in a Fox Business exclusive, Deere's Chief Financial Officer and Senior Vice President, Josh Jepsen. Well, Josh, for a company that started selling tractors 107 years ago, the stock action is no small feat, especially after you guys said that you expect pre-tax tariffs to bruise you this fiscal year to the tune of, what, about $500 million? What's the best piece of news, though, that you think has investors piling in?
Thanks, Liz. And you know, for a company like ours, 188 years old, I think folks are excited about the performance that we've had in the light of all the uncertainty that we experienced during the quarter. So I think really strong performance, executing, controlling what we can, as well as, you know, you think about that tariff headwind that you mentioned, about $500 million over the course of the year. And showing resilience in our performance. Our full year guide from an income perspective didn't come down nearly as much as that tariff impact.
Okay, the tariff impact is something, though, that we're hearing from everybody. Today you saw Walmart saying they're going to have to raise prices. Tell me about your pricing right now, because you're also being hit by the steel and aluminum tariffs. Obviously, much of your equipment uses steel.
That's right, Liz. We're seeing some inflationary impact from steel, and then when we step back and look at our exposure from a supply chain perspective, we will see those tariffs come through. I think one of the things that you know is beneficial for us is nearly 80% of what we sell in the U.S. is produced here in the U.S. And of that, you know, 75% or a little bit more is sourced from U.S. suppliers. So that certainly helps us. We're very U.S.-centric in our manufacturing footprint, and that is key for us. We have to be on top of being cost competitive because we also export a tremendous amount from the U.S. Almost 25% of the products that we build in the U.S. come from our U.S. factories. So it's certainly a balance between understanding the price dynamics and what the market can bear, given where we are from a cyclical perspective, as well as managing cost and not just the tariff cost, but other costs in the system so we can try to find the right balance as we manage margins as well.
And your customers, your farmers need to find the right balance, too. I mean, we just showed, obviously, crops. And China normally would be buying, as I saw, 1 row out of every 4 in just the Minnesota soybean crop alone. So they are buying a lot. And if they are hit with tariffs, and again, we have a temporary tariff truce with China at the moment, but still, there's a percentage that's on the books here for what they have to pay for any imports from the U.S. What are you hearing from your farmer customers?
Definitely, the uncertainty provides or pushes caution for our customers as they look at their markets and really their ability to access export markets around the world, China being one of them. I think from a grains perspective, what we've seen in the past is grains are fungible, and we'll see trade flows shift and evolve over time. It does take time and generally has some impact as it relates to our customers' cash flows and crop receipts. But you know, important for us, and I think what is different about our strategy and our ability for our farmers is our ability to help make them more productive, more profitable, and by leveraging technology that we can do that. And I think that's key to our value proposition and what differentiates what we can deliver for them.
So, you know, you have a huge national footprint, but a massive international footprint. You're everywhere. It's not just in China. You're in Mexico. You're in Israel. I mean, we can put up the flags. It's just about everywhere because, listen, if you are doing your fiduciary duty as a company, you know you want to not just grow in the United States, but to have all of these other different international areas, including Ukraine and Brazil, Argentina. I mean, the list goes on. You're in Poland, everywhere. So My question is, as you continue to try and move some of the build out, or at least commit more money to the build out in the United States, let's talk about some of those ventures. You are doing brand new construction for an excavators manufacturing plant, and I think that's pretty interesting, and that's going to be in North Carolina. Tell me about that one, not to mention that you're expanding in Missouri as well.
Yeah, certainly. In North Carolina, Kernersville, we are insourcing. We're bringing back excavators from our former joint venture partner. So those are going to be coming from Japan into the U.S. So we are designing, developing, and manufacturing those in the U.S. And that's an opportunity for us to differentiate ourselves in the market, bring more technology into our products that we can leverage from our agricultural business. That we think creates opportunity for us to deliver more value for our customers and also drive better outcomes for Deere as well. And that's important because today, in the North American market, in the U.S. market specifically, about 70% of excavators are imported. So we'll be, I think, really one of the few, if not the only, producer or OEM that designs, develops, and manufactures those here in the U.S.
I'm very interested to know about the situation in Mexico. So, as covering your company over the past several years, you were building out a plant in Mexico for the cabs to be built for your excavators. Let's talk a little bit about that, because President Trump, during the campaign, took aim at you guys and threw out some wild numbers saying if John Deere, why he's taking on a classic American name was a question for a lot of shareholders. They didn't like that. But if John Deere is going to try and move anything from Mexico into the United States, I'm going to slap a 200% tariff on your products. Have you heard anything since then?
No, not specifically, Liz. And to be clear, we've operated in Mexico since 1950. We've been there, serving the Mexican market and other markets for a long time, and really, has grown some really over the last 70 plus years, particularly as we came through NAFTA and USMCA, where we've leveraged that from a component manufacturing perspective. But to step back and you think about what we sell in the U.S., complete goods, machines, 5% come out of Mexico, and of our supply base for the U.S., only about 10% come from Mexico. So it's a relatively small component of what we ship into the U.S. from a complete machine perspective, and only about 10% of the components that we source for our U.S. factories.
Yeah, that didn't make sense to a lot of people, especially considering all that you do in the United States. I mean, he doesn't like layoffs, certainly. You guys had to do some layoffs in Iowa. But let me ask about the future, and that is the autonomous tractor. And I don't care if we have people who've never been on a farm before. They need to see this. I saw it at Consumer Electronics Show. I got up in it. To think that an autonomous tractor can actually be, going through all of the fields during the night, during the day, and the farmer can actually be back at his desk selling and working and doing other things is pretty impressive. How far do you take the AV tractor in the future?
There's certainly a tremendous amount of opportunity for us, and this is really tip of the iceberg as we think about autonomous tillage, is where we've started. But it's all about some of the basic customer challenges that they're facing today, and that's access to skilled labor, job quality, and the ability to get the job done at the right time. And what we found is by bringing autonomy to tractors and tillage is what we've been doing the last few years. It creates opportunities for, just like you said, they can be at home, they can be with their family, they can be at high school football games, or they can be doing other more value-added jobs on the farm. Given the challenges that they face as it relates to labor, that's a big step forward, and we really believe we're going to build this out and build the full production system. So think about every step a farmer does for corn and soybeans, whether that's tillage, planting, spraying, and harvesting. We will make all of those autonomous here over really probably the balance of the decade.
Hey, those farmers in Minnesota want to watch Golden Gopher games, okay? They want to sit and watch the Gophers beat Ohio State or whoever they're playing. It is great to have you, Josh. Thank you very much.
Thank you so much.